Hello traders. In the previous video I introduced the concept of support and resistance. I explained what factors determine the reliability of a support or resistance level and also discussed the difference between static and dynamic support. In this video I will be focusing specifically on static support. I will explain a bit more what it is and provide various examples of static support levels. If you're interested, the upcoming video will be a practical charting workshop in which we will begin with a blank chart and draw static support levels. If you're interested, write it in the comments, please. We will begin this video with time as a static support level because many traders tend to overlook time as a significant support or resistance factor. However, the latter could be the most crucial among the three key factors: price, volume, and time. To understand the importance of time, we can refer to Gann's words, W.D. Gann, that said the time factor will outweigh both price and volume. When the time is up, the price movement will start and a substantial volume will begin, either up or down. So you can see that according to Gann, time is actually more important than price and volume. Observing and measuring cycles, especially long-term ones like the 4-year cycle of Bitcoin, can be helpful in trading. Short-term cycles such as moon phases and 180-day cycles, 144-day cycles can also be used, but I think they are unreliable unless, of course, you are highly skilled in constructing this short-term cycle. I don't know. I don't want to disrespect anyone, but to put it bluntly, I've never seen a short-term cycle that works perfectly, not even most of the time. So I am disregarding short-term cycles, at least currently. But the long-term cycles, especially the Bitcoin 4-year cycle, is very reliable and observable because it includes 1 year, more or less, of accumulation, a 2-year period that begins after the halving, this is the orange line, of a markup phase, and another year of a markdown phase. And it goes the same, it was the same from the first cycle, the second cycle, the third cycle, and now we are at the beginning of the fourth cycle. We are close to completing the accumulation phase. And if these cycles will play again like they did in the past, we can expect after the halving at least a year and a half of a markup phase, which will probably end in a blow off top and another bear market which will last a year. This pattern makes trading more predictable and easier, and the more it repeats, the more reliable it will get. Of course that I don't trade just based on cycles, but this makes your job a lot easier. Long-term cycles are easy, and I think that you should take advantage of that. Next static time support or resistance is monthly returns. With your permission, I would like to refer to Jesse Livermore, who said that there are times when one should speculate, as indeed there are times one should not. There is a very true adage: you can beat a horse race, but you can't beat the races. So it is with market operations, meaning that in every market there are phases when trading is easier or harder. There are periods of sideways movement, upward trends, and downward trends throughout a year. A pattern can be observed by analyzing the monthly returns over years. Following this pattern can help you make better trading decisions. It doesn't take a genius to see a pattern. For example, the month of October is overwhelmingly bullish. And let's look at another month. For example, January. January is relatively bullish, but you can see that it's not straightforward. There were Januaries that were losing. Let's go over to September. September is overwhelmingly not a good month. So you should take into account when trading on September that it is very likely that the longs are in disfavor during this month. And maybe by studying past history, you can consider the month of September as a static resistance level and take this into consideration when you are thinking about longing Bitcoin in September. Maybe you should short Bitcoin in September and long Bitcoin in October. This is how you use monthly returns. Next up is Fibonacci time. TradingView gives you the option of drawing Fibonacci time support and resistance levels. However, my experience with Fibonacci time is that it is not a reliable method of estimating support or resistance level, but there are traders that do use Fibonacci times in many different ways. I liked one specific technique from Michael Jenkins, who said it is possible to utilize Fibonacci sequence as time-based support and resistance. For instance, Fibonacci numbers such as 3, 5, 8, 13, 21, etc. are suitable for interpreting hourly charts. When a trend persists for 5 or more hours in the same direction, it usually indicates longer term persistence. You can anticipate reversals at the Fibonacci numbers of the low. For example, after 5 hours, watch out for a reversal at the 8th or 13th hour, and so on. I can't say I've tried it. I don't know if it's trustworthy. If any of you trade Fibonacci time and can share with me your experience, I would be grateful. Next up is horizontal support and resistance. Horizontal support and resistance levels are determined solely based on the price axis. The principle behind these levels is that specific price points attract the interest of buyers or sellers more than others. These levels apply to all time frame and price ranges. Traders often use horizontal levels by marking significant highs and lows for future reference. For increased accuracy, traders commonly use volume data in combination with price. I will show you later how it's done. And to mark the highs and the lows, you could do it with a naked chart. You could do it with a Gann swing chart or swing indicators. This is the Gann swing indicator of the 1 bar. There are many methods of Gann swing charts. This is the 1 bar chart on a weekly time frame, and I chose this example simply because it is easy to demonstrate. You can see noticeable lows, noticeable highs, and these levels act as support and resistance. You can see that the 2018 high of 20,000 was later support. It was breached shortly, but price got back up. You can see that the 48K level of January of 2022 was resistance now as we speak today. And of course, you can move over to the daily time frame, to the 4-hour time frame, and narrow down your chart and use support and resistance levels. It gets easier the more you do it. I will show you how I do it if you like, with a zigzag indicator or with a naked chart in the next video. Next static time support is percentage retracement levels. Percentage retracement levels are widely used to identify support and resistance in the financial markets. The two most commonly used methods for percentage retracements are Fibonacci number retracements and Gann percentage retracements. To use this method, you must identify a swing high and a swing low. For example, the 15.5K is a swing low and the 49K level is a swing high. Depending on the direction, it can show either support or resistance. Pulling a percentage retracement from the swing high to the swing low will reveal horizontal resistance levels, not like in this example, because you always draw percentage retracements from the left to the right. This example shows you how to pull a percentage retracement from the low to the high, and the aim of pulling a retracement from the low to the high is to identify support. For example, the yellow retracement is a Fibonacci retracement from the low, from the cycle low of 15.5 to the cycle high of 49. This is the first retracement, and this retracement does provide support and resistance. You can see that the 0.236 retracement is providing support for price. Now, if you want some more confluence with retracement, you take a Fibonacci retracement from a local swing low to a local swing high. For example, I pulled an additional Fibonacci retracement from the 25K level to the swing high again. And this should give us confluence around some levels, such as you can see that between, let's say, 40 and 41, we have the confluence of both of these fib levels. We also have an additional confluence of a horizontal price support level at around 40K. So we can see that this level is meaningful and it should provide support for price, at least in the short term. And it goes on and on like this. You always gather confluence and you don't rely on just one percentage retracement for support and resistance. Next method of discovering resistance, mainly resistance, is Fibonacci extension. Fibonacci extension levels are not to be relied upon solely, because Fibonacci extensions are projected into the future, and you don't always know exactly at which Fibonacci extension price will stop. So you should use a Fibonacci extension together with other confluence factors. For example, let's go over this example. In this example, I pulled two Fibonacci extensions, and I also pulled a horizontal price level. The horizontal price level was the 48K level. Then I pulled the Fibonacci extension from the cycle low to a local top and the low again of 19K, and this is the gray lines that you see. And I took another Fib extension from the 19K low to the 30K high and to the 25K low again, and I was looking for confluence factors, and lo and behold, we had a lot of confluence around the 48K level. We had the horizontal price level, and we had two Fibonacci extension levels close to each other. So the 48K level had a lot of confluence around this resistance level, and you can use it in trading. How? First, by taking profit initially. You can also use it for shorting, but you don't short blindly just on the level. You want to see a rejection like we saw this week, going up above 49 and coming back down again. Then together with these confluence factors, it could be enough for a short. Next up is volume indicators. I don't use volume indicators solely as support and resistance, but they do provide a lot of confluence, because what the volume tells you is the numbers of buyers and sellers in each level. So let's go over Bitcoin's chart. This is the value area low, okay? And you can see that the value area low has confluence with the Bitcoin bottom. So this could be a very good indication for you to try and long this level. This high volume node at the 20K level is even better, because you can see that it is also a horizontal level that provided support and resistance alternately. So the point of control together with the horizontal level is very nice confluence. The value area high is also a meaningful level. You can see that it is around the 40K level, so it just adds confluence to the 40K level that we discussed previously. Look here at this high volume node. A high volume node at 48K can also add confluence for these resistance levels. Of course, that you don't use any of these support and resistance methods alone. You always try to do a combination of all the levels together to reach a more significant confluence, that you will have more trust in your decision. Next is very nice. I call it significant numbers. W.D. Gann believed human behavior is consistent and predictable because people stick to what they know, and people usually prefer specific prices over others when trading, and their decision making revolves around these prices. In general, people think in multiples of 5 and 10. And these even figures are frequently used by the public when buying or selling assets. 100K, $100, $10, 15 cents, it doesn't matter. It's all multiples of 5 and 10. And consequently, the value of assets often fluctuate around these figures before changing direction. Now, there are several trading methods for analyzing price that include, besides multiples of 5 and 10, harmonic numbers like the multiples and divisions of the number 360, division by 8, Fibonacci numbers, and other harmonic numbers. I personally don't combine numerology with my trading. I can say that I am convinced of the value of numerology, at least not at the moment. And I think that the 5 and 10 multiple gives us enough to go by when trading. This is the Caspa chart, and you can see, amazingly, where did price stop? Where was resistance? At the 15-cent level. Now, where did Caspa find support? At the 10-cent level, multiples of 5 and 10. And where is the current local resistance? At the 12-cent level, which is an even number. So 15, 10, and 12 are both psychological numbers, and you can see how they work in trading. So significant numbers shouldn't be ignored because they pertain to human psychology. Numerological numbers, harmonic numbers, and all these things, this I leave to people that understand numerology better than me. Personally, I don't know anything about numerology, and I think it would be foolish of me to incorporate numerology into my trading. That's all about static support. I hope you found it useful. My next session, I intend to make it a charting session, a workshop, and in which we will discuss all these techniques, and I will show you how everything is done. Of course, provided that you are interested. If you are interested, please put it in the comments, and it will also be a nice feedback for me because I really put a lot of effort into this lesson. Thank you very much and goodbye.